Hello there traders. The primary drivers of the US stock market's growth in 2023 were the Federal Reserve's rate hikes and breakthroughs in artificial intelligence. However, as we step into 2024, new questions and uncertainties arise. Does the unexpectedly strong rally at the end of last year indicate that the key US stock indices are already overvalued in January? If so, where will stocks go next? Fitch Ratings no longer forecasts a recession in the US this year due to signs of economic strengthening. The rating agency predicts that the Fed will cut interest rates 3 times in 2024. Considering that all 3 major indices closed 2023 with double-digit gains, replicating such success in 2024, especially with the expected rate cuts by the US Central Bank, will be challenging, if not impossible. The S&P 500, despite starting last Monday at a low of 4,687, managed to reach a new yearly high of 4,800 on Thursday. The S&P has been moving up since November last year, marking the longest winning streak in almost 20 years. In 2023, the index increased by 24.2%, with technology, telecommunications, and the consumer sector leading among the 11 main sectors. The rally in technology companies pushed the index up on January 8th, exceeding a 1% increase for the first time since December 21st. Additionally, their 1.4% gain became the most significant single-day increase in the past 8 weeks. On January 12th, the main stock index resumed its upward trajectory following unexpectedly strong labor market and consumer price reports, with producer inflation showing a decline, supporting market sentiments for imminent changes in the Fed's policy. Several representatives of the US Federal Reserve spoke last week, cautioning that thinking about an imminent rate cut is premature. On Monday, Atlanta Fed President Raphael Bostic stated that he expects the first rate cuts only in the third quarter. On Wednesday, New York Fed President John Williams said that economic prospects remain extremely uncertain and decisions on monetary policy will consider the totality of incoming data, changing perspectives, and risk balances. On Thursday, both Loretta Mester from Cleveland and Thomas Barkin from Richmond warned that more information is needed before making any decisions in the coming months. For Chicago Fed President Austin Goolsbee, inflation data also did not serve as sufficient evidence for the regulator to start lowering rates in the near future. In 2023, the Dow Jones Industrial Average approached a record high, gaining 13%. The first 2 weeks of January, as seen on the chart, were highly volatile. Overall, numerous ups and downs resulted in a minor increase of 0.7% in Dow Jones value from January 8th to 12th. On Wednesday, it fell by 0.42%, influenced by a moderate rise in Treasury yields and investors' assessment of the prospects of Fed interest rate cuts. On Thursday, however, it jumped by 0.45% in anticipation of the U.S. consumer price report. Even with the Wednesday's dip, Dow Jones closed the day near the upper boundary of the weekly range of 37,406 to 37,800. Friday saw the industrial index rising by a minimal value of 0.07%, once again experiencing fluctuations in the U.S. stock market landscape. In addition to the Dow Jones and S&P indices, which reacted to economic data and the Federal Reserve speakers, Boeing stock also declined. Boeing shares plummeted by 13% after an Alaska Airlines plane made an emergency landing when a panel broke off in flight, prompting the U.S. Federal Aviation Administration to suspend the operation of 171 Boeing airplanes to assess their safety. On the fourth day of the suspension and after a speech by CEO Dave Calhoun in which he acknowledged the defects, Boeing shares edged up by 0.92%, but then they dropped again. Meanwhile, United Airlines said it found loose bolts during inspections as well. In Japan, a Boeing plane was found to have a crack on the outermost of the 4 layers of the cockpit window. The company also had to delay long-awaited deliveries of Boeing 737 MAX planes to China because of the problems. While the Dow Jones Industrial Average is sagging under the pressure of declining airline company stocks, the high-tech NASDAQ continues to hit new peaks. The index closed 2023 with a 54% growth. According to economists, it's unlikely to repeat such a result in the future. On the other hand, at the beginning of last year, those economists could not imagine that artificial intelligence products would trigger a rally in artificial intelligence-related stocks. As a result, there is even a new term, Magnificent Seven, which refers to the largest players in the artificial intelligence market. They are Google, Meta, Apple, Amazon, Microsoft, Tesla, and Nvidia. For example, the NASDAQ index soared by 2.2% on Monday, January 8th, thanks to a jump in shares of chipmaker Nvidia. In general, the index was bullish within the range of 16,528 16,907 during the last week. However, experts differ on how the stock market is going to develop in 2024. Some believe that investors will continue to be interested in developments in the field of artificial intelligence. Therefore, the shares of artificial intelligence-related companies will grow. At the same time, others fear that the Magnificent Seven will turn into a bubble that will burst sooner or later, leading to a sharp decline in the stock market. So far, the stock market is following an optimistic scenario. After the announcement of new products designed to help the PC industry attract consumers with artificial intelligence, shares of Nvidia Corporation jumped by 6.4% in a flash. In addition, the U.S. corporate reporting season for the first quarter is getting underway. Bank reports began last Friday, and their mixed data offset cooler than expected inflation news. Meanwhile, major U.S. companies reported lower earnings. Nevertheless, JPMorgan, Wells Fargo, Bank of America, and Citigroup noted the U.S. economy upbeat, stressing that U.S. consumers remain resilient. For example, JPMorgan, whose fourth quarter profit plunged by 15%, forecast higher than expected interest income in 2024. Bank of America reported a net income of $0.7 per share for the third quarter, while Citigroup reported a net loss of $1.16 per share. I wonder what results Goldman Sachs and Morgan Stanley will report today. We continue to monitor the stock market situation to keep you abreast of the latest events. Subscribe to our channel and leave comments. We are working for you, making the most relevant video reviews every day and every week. That is all for now. See you later.